Hey, what up, traders? This is Jeremy with Escape Velocity Trading coming at you for the market bias update report. Looking out to the trading week ahead, starting today, Sunday, March 10th. Normally, I go through the futures market, but I'm actually going to go through some of the individual indexes this week and also just the major SPY, QQQ, IWM, and Dow Jones. Partially doing that because I know a lot of people that have been tuning into these videos don't participate in the futures market yet. But basically they show the exact same chart. So like right now we're looking at the SPY, which is the sector ETF for the S&P 500. This is very similar to the futures chart slash ES. You'll notice they are basically identical if I go back and forth. The main reason that I tend to do my analysis for you guys on the futures instead of the ETFs most weeks is just simply because the futures market opens at 3 p.m. Pacific time, and therefore, if I'm doing this video in the afternoon, we can see if there has been any news that has hit the market that is moving the market one way or the other. But right now, I'm not seeing a huge price action one way or the other. So I'm going to do the analysis today, like I said, on the sector ETFs. Before we dive into that, just wanted to look real briefly at our results from trading this past week. So these are all the futures trades that I took last week. Had 14 trades total, 10 wins, 4 losses, and ended up making just shy of $10,000. And the biggest loss was a short on Bitcoin. You can see any of these that have a negative in front of them were shorts. And you might be wondering why I was shorting numerous times here this last week on Bitcoin, even though I have a very bullish long-term thesis on it. And basically, these were mostly day trades. So you can see here in the days in trade column how many days I was actually in each of these trades. So you can see these were really quick in and out trades. These are not long-term thesis trades. And when you're day trading, you kind of discount longer term analysis and look at shorter time frame, and you're just playing quick ins and outs. What we learned from this past week, honestly, I was a little bit too aggressive on one of these and did not take the closing order as seriously as I should have. There was a lot of volatility in the market, and I should have been playing a tighter stop. So I gave back significant ground there. Up until this point, actually, on Wednesday last week, I was up over 14K at one point, gave a bunch of that back, almost a third of it back on that one trade. So obviously was not playing my stop losses where they needed to be to protect myself in case of a rally with the extra volatility that was there. And then spent the rest of the week basically slowly trying to grind that back. Ended the week, like I said, just shy of 10K gain. So awesome, awesome trading week. But the volatility got the better of me here a little bit, and I should have been playing my stops a little bit tighter there at the top end of the range when there was some volatility there. So that's kind of the lesson from last week is just make sure always, always, always you have your stop losses where you want them and you're only risking the amount of capital that you want to risk for it. I was manually using my stop losses for that instead of having an automated trade to close my account from that position, and the volatility was moving so fast that by the time I went in and manually closed it, it had lost about 2K more than what I anticipated for that trade. So that was kind of a bummer. Anyways, looking out for our analysis, let's dive right in. S&P 500, this is a weekly chart looking at 3 years of data. So each candle is 1 week, and we're looking at 3 years worth of data. Data. um, obviously overextended here. There's really nothing to say. I am not the kind of trader that likes to chase incredibly bullish price action. I like to buy off of support levels and bounces. I do not like to buy at the top of the chart, so I have absolutely no interest here except for potentially shorting the market if we get some bearish signals. So S&P 500, not interested hardly at all. I don't like to short incredibly bullish action like this, but I do see us probably pulling back fairly significantly here, I'd say, throughout the course of this week. So anyways, I might day trade some shorts, but other than that, I'm staying away. If we go out to the QQQ, this is the tech sector. Same thing, obviously huge bullish run, top of the chart, getting some bearish signals on our MACD and on our RSI down here on the chart. So that is interesting to me, telling us that we might have a topping pattern coming in, obviously overextended. So again, needing a pullback anyways. Might end up shorting some stuff this week on this as well, but other than that, not interested. Going out to IWM, this is the Russell 2000, so it tracks the smaller stocks on the US indexes. And we have been chopping around for a couple of years now, basically in this range. Tried to get out above it, failed. And honestly, it looks like this might be another failing attempt. We had a doji last week, which is an indecision candle with a very, very small price point move from open to close for the week and a larger range shown by the wicks on either side of that candle. And basically, that just says neither the bulls nor the bears had a strong argument in the market. And when there is not a strong argument one way or the other, it's probably best to sit sideline. So I am probably going to be sitting on my hands quite a bit this week and then possibly doing some day trades to the short side. But that's kind of my general thesis for pretty much everything this week. Going out to Dow Jones, same thing. We actually have a little bit more of a rounding top here than the other ones. So if we go back to the SPY, you'll see this is kind of straight up in a hesitation candle. The Dow Jones actually has slowing momentum and a little bit of a rollover here. So we might see a little bit more profit taking and a little bit deeper pullback on the Dow Jones than on the S&P or QQQ. So keep an eye out on that. If we go out to gold, gold had an exponential move the last 2 weeks. It has just been awesome to see. If you're not in the gold trade already, you've kind of missed the boat on this. Any pullback down to like 195 to 194 area, if you don't own gold, you should be looking at adding gold for a long-term position. I just can't say enough good things about gold long-term, especially just with the inflation issues that our country is facing and the globe is facing. It makes sense to designate a portion of your portfolio to gold. And on that, the gold miners, even though gold has been going up, 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 the gold miners, which tend to play catch up when they haven't been participating when gold spikes like it just did, it is likely that we are going to see some catch up here. If we break out above the $30 handle, it'll probably be a quick fill up to 32 and probably back up to about 35 long term. So interested in playing a catch-up trade on gold. Going out to silver. Silver is still underneath its diagonal long-term resistance that was drawn on a monthly chart. And not super interested here. I did actually play the breakout here down around like 2150. Took profit already on Friday and now just kind of waiting to see if eventually we will get back above the 23 level. If we do get back above 23, I think there's a good long-term or position style trade to be found here. Long-term investors are holding anything over than a year. In position style, you're basically looking to catch one big full swing of a price movement, usually holding for a few months up to, just shy of a year. So just in case anyone doesn't know what position trading is. Going out to USO, nothing to see here. This chart is, yeah, there may be a play to the upside here at some point. It's been struggling a bit. It hasn't really gotten much momentum, even though it broke out here about a month and a half ago. We've just been alternating one up, one down, one up, one down. I don't see any reason why we're going to break that pattern this week. I think we still need a little bit more consolidation just based on the fact that it has not been able to gain much momentum there. So not super interested this week, possibly next week. Going out to materials. So materials has had a nice run. Again, after a big move like this, not really interested in chasing it. It's also up near a fairly significant resistance zone from the last few years. So if anything, we need a pullback back down into about the 85 handle. If we get a doji or similar kind of slowing momentum candle there and then a move to the upside the following week, that would be interesting. But I think we're several weeks out for a trade on basic materials. Going out to communication sector, we do have a potential breakout here from kind of a high base, but honestly, the market just looks tired to me. We're kind of getting a double top action on the RSI, basically double top set slightly higher high here, but I'm going to basically call that a double top because it wasn't very significant. And we are seeing the momentum slow and looking like this is going to cross over and give a bearish cross. So I'm not super interested in the breakout there. If we go out to energy, energy is one of the only places in the market that I am actually interested in currently. I think we do have an opportunity for energy to rock and roll back up to 92 to 93 area, somewhere in there over the next couple of weeks, which would represent from current price like a 5 to 6% gain probably over the next 2 to 3 weeks. So interested in energy. Going out to XLF, huge bullish run, and I'm still actually bullish on XLF. If you go into the different stocks that make up this sector, uh, they're all setting up really nice bullish patterns on the daily chart. The problem is if you go out to the weekly chart, they look like this, and they have these huge overextended runs that, again, just not interested in chasing. That is the theme basically for this entire week's video. Going out to XLI, exact same thing. This is the industrial sector ETF. XLK, this is our technology sector. Not as overextended as some of the other charts, but have slowing momentum. We have double tops on our RSI and actually a slightly lower high here compared to the previous two, and kind of rolling over on our MACD as well. Bigger volume for a red bar on Friday, so not interested in that. Think we need a reset, probably back down to 190, 192, somewhere in there, before I'll get interested in trying to look for the next run. Going out to XLP, this one's just kind of chopping in a range. It has recovered significantly off its lows, which was actually impressive because it broke down with significant volume and momentum to the downside. Uh, Double bottomed here about, what is that, 4, 5, 6 months ago, and has been off to the races ever since. But I think this is gassed and probably needs to consolidate and go sideways for at least a few weeks here, if not a month, before I will get interested. XLE, the real estate sector ETF. Actually, interesting pattern. I don't particularly like trading this sector a whole lot, but it does have an interesting pattern here. If we can get back above, let's say $40.75, somewhere right in there, there is room to the upside, and it would be kind of completing a long-term bottoming consolidation pattern. So if real estate sector is your thing, you might be able to look in here and find some good REITs or something with high dividend yields. That can be interesting, especially coming off the lows here. But again, not really my cup of tea because I like things that move a little bit faster than the real estate sector does. Same thing for utilities. You know, we have this massive resistance line here that has been playing out for over a year. Still have overhead resistance from the weekly 200 period moving average, the decreasing 50 period moving average. And even if we break above that 50, then we have the diagonal resistance overhead that is going to put pressure on prices. And then we have the 200 period moving average. So there's nothing really to see in utilities. Going out to healthcare, exact same pattern, the whole frickin' market, guys, just like giant bullish channel and no real reprieve. That is the story of the entire market right now, and we need a reset. So have no interest in healthcare. And then finally, going out to consumer discretionary, have an overhead resistance channel here that it's bucking into. And honestly, the MACD is just kind of a mess. Not super interested in what that's telling me. And honestly, just don't really like the momentum and picture here. I think this week is going to be a 95% just sit on your hands type week. If we do want to go out, since we usually touch on crypto, let's dive out to Bitcoin before we wrap up. Looking at the weekly chart, we did have some slowing momentum on the weekly chart here. So we had huge bullish candle breakout, slowing momentum candle with a slower or a smaller range, excuse me. And now we're actually opening for from the weekend price action and starting to roll over a little bit on the weekly. If we drop that into the daily chart, it makes sense to me that we will come back down and try to test the 65,000 level. I would personally, honestly love a dip below that to come back down and test the rising 20 on the daily chart as support. By the time we got there, it would probably come up somewhere in the neighborhood of 59 to 60,000, somewhere in there. Again, I am insanely bullish on this asset for the long term over the next like 12 to 18 months. But after huge moves like this, I just get tired of chasing it, and I start to look for places that I can get a better risk to reward. So we need a reset on this. There's really no ifs, ands, or buts about it. I will probably continue to day trade this area, potentially flipping back and forth from shorting opportunities to bullish opportunities based on what the chart is giving us. And right now, honestly, we kind of have this double top forming potentially. Had this big volatility wick that broke out to new highs on Friday, failed to hold it, came back down, actually broke support briefly, came back up, and this is just signaling that there is massive volatility after a massive run, and that tends to lead to bearish price action on the short term. If we toss this out to an hourly chart, I wonder if this is actually broken its moving averages yet. It's trying to break its moving averages. It hasn't yet, but I don't like the look of this at all. The MACD has been struggling to gain momentum at all. Actually, just crossed bearish on the short-term 1 hour chart. So again, not super interested. Need to wait a little bit on that. Going out to Ethereum, these two tend to trade in lockstep with one another, and Ethereum is actually leading to the downside right now, which is interesting to me. If we back this out to a 4 hour chart, let's see if it's holding its moving averages. And it's holding. It tested below it and is holding for now. It'll be interesting to see if we break that on the next 4 hour candle. If we do, Ethereum's probably coming back down to about the 3650 arena, and this might end up being a nice short-term short opportunity. On the daily chart, yeah, that 3650, 3670, somewhere right in there would be a good short target, basically just pulling back down to the rising 9 EMA. Finally, let's go out and just look at the week ahead for economic data, guys. CPI report and PPI data, those are inflationary reports that come out every couple of weeks. First one on the 12th, next one on the 14th. So keep an eye on those. Of the two, I am anticipating the CPI data is going to be a little bit more important to the market this week. And if that comes in hot, that might be the catalyst that pushes prices lower on the short term. So keep an eye out for this and see where we fall compared to the previous month and the expectations. And then finally, if we go out, this is a 1 week performance of the heat map. And looking around, honestly, we are losing leadership from a lot of the big tech sector names that have caused the huge run in the market over the course of the year so far. And they are not participating right now. Google actually has broken support. Apple has broken support. Microsoft looks like it's rolling over. Amazon looks like it's rolling over. Tesla is just getting taken out behind the shed and murdered. Really, the only space in the market other than energy and financials that I'm even remotely interested in would be metals like gold and silver, and then the semiconductor arena driven by the AI theme. So if you are going to be participating in the market this week, those are the areas to check out. Otherwise, hang out, sit on your hands, and remember that patience is a position. You don't have to have exposure to the market all the time. Be patient, wait for good setups, and that is going to be kind of the message this week. So I hope that helps, guys. As always, let me know if you have any questions, and I am here to help.